this lesson, we will address consumer arithmetic, which can be applied to your everyday life. At the end of this lesson, you know how to do the following. Calculate your salary after statutory deductions and income tax. Calculate percentage profit or loss when buying and selling an article. Calculate the price of an article in a store, either after some general consumption tax or GCT is added, or after it has been discounted in a sale. Calculate the total cost of an item sold by the hire purchase system. Calculate the charges shown on certain utility bills. Calculate simple or compound interest on an investment, and use exchange rates to convert from one currency to another.
Lesson 1. Whether you are self-employed or employed by a company on a fixed salary, you should understand the details of your financial benefits and commitments. If you are self-employed, earning a certain minimum net percentage profit on your investment, remember, the word net applied in this sense means actual income after taxes and statutory deductions have been met. Most naturally, you would like to know that you can calculate whether you have been taxed fairly. As shown in our lesson on computation and number theory on percentage gain or loss, a percentage profit is equal to the actual profit amount divided by the original value amount and multiplied by 100. Therefore, the actual profit is divided by the cost price and multiplied by 100. Now, percentage loss is equal to the actual loss number divided by the cost price and multiplied by 100. Look at this example. An article is bought for $4,500 and the person wishes to sell it to make a net profit of 20% on his purchase. If overhead costs of $400 are incurred by this budding entrepreneur, what price should he sell it for? 20% of $4,500 is equal to 20 divided by 100 multiplied by $4,500, which gives $900. Therefore, the selling price is $4,500 plus $900 plus $400 to cover the overhead costs. The article would therefore be sold for $5,800. Let us try another example. A person buys a car for $350,000 and after an accident sells it for $250,000. What is his percentage loss on this transaction? Remember, percentage loss is equal to the actual loss divided by the cost price multiplied by 100. In this case, $100,000 divided by $350,000 multiplied by 100. This gives 1,000 divided by 35. The percentage loss is therefore 28.6%. Company-employed persons receive a fixed wage or salary from which certain deductions are made. Some people are employed at hourly rates and can sometimes earn compensatory rates called overtime rates when working after normal hours, holiday periods, and weekends. The deductions made from the average pay package include national insurance contributions, perhaps pension contributions, other statutory deductions, as well as income tax. After all tax-free allowances are deducted from one's gross income, the balance remaining is called the taxable income. So a person employed at an hourly rate of $320 works 35 hours during a certain week and also puts in 6 hours of overtime for which he is paid time and a half. How much will his gross earnings, which is the taxable and non-taxable amount together, equal at the end of the week? His gross earnings would equal to 35 multiplied by $320 plus 6 multiplied by $320 plus $160. This is equal to $14,080. Now look at this second example. A female accountant earns $120,000 per month. She pays 1% of her salary in national insurance contributions, which is deducted before tax is paid. She is also allowed $10,000 tax-free earnings per month. Calculate her taxable income. Please note that tax-free earnings means the amount that she is allowed to keep before she is taxed. She is then subject to the following tax system. The first $480,000 of taxable income per annum is taxed at 15%, and the balance is taxed at 25%. How much tax will she pay, and what will be her net income per month? You can now attempt the following multiple-choice questions.
A trader imported a large quantity of dolls in order to resell at a profit of 50%. The cost of importing the dolls was $120,000. If there were 600 dolls altogether, how much would each doll be sold for? Is it A, B, C, or D? A shopkeeper buys an article and sells it for $1,680 at a profit of 20%. Was the original cost of the article A, B, C, or D? A worker's basic wage is $180 per hour. In a certain week, he works 40 hours at this basic rate. He also works 10 hours overtime at time and a half. How much would he earn in that week? A, B, C, or D? A school teacher earns a basic salary of $48,000 per month. Out of this, $6,000 must be paid in statutory deductions and are therefore non-taxable. The teacher is then allowed $10,000 tax-free income per month. If her taxable income is subject to tax at 25%, what would she have to pay? A, B, C, or D in tax overall? A person buys a quantity of goods for $150,000 but can only sell them for $180,000 or less. What is the maximum percentage profit this person can make? Is it A, B, C, or D?
Lesson 2. Let us now begin our lesson, beginning with general consumption tax. As an important addition to revenue collection, most countries charge a kind of general consumption tax GCT on edible and luxury items. Some basic food and educational items are usually excluded from this tax, but most goods have a certain percentage added to what would otherwise be their selling price. Let us look at an example. A customer purchases a VCR for $15,000 only to see tax to be added on the label as she goes to the cashier. If GCT at a rate of 15% is to be added, how much more will she have to pay? GCT is equal to 15 divided by 100 multiplied by $15,000, which gives $2,250 additional, is the answer. We will now move on to discounts. This is when items are sold at much reduced or discounted prices. Here is an example. A store wanted to clear out its stock and offered some items at 75% off, that is, a discount of 75%. If the original selling price of the item was $60,000, how much would the customer buy it for in the sale? 75% of $60,000 is equal to 75 divided by 100 multiplied by $60,000, which is equal to $45,000. Therefore, the price in the sale is equal to $60,000 minus $45,000, which gives $15,000. Another method would be to say that if 75% of the cost is deducted, only 25% would be left for the customer to pay. Therefore, the price in the sale is equal to 25 divided by 100 multiplied by $60,000, which is equal to $15,000. Here is another example. A dress was priced at $720 in a sale. If the dress was advertised as being offered at 25% off, how much did it cost prior to the sale? Applying algebra here would be a good idea. Let X dollars be the price before the sale. Therefore, 75x divided by 100 is equal to 720. That is, 75% of x is left after the discount of 25%. Therefore, x is equal to 720 multiplied by 100 divided by 75, which is equal to $960, which is the price before the sale. Let us look at the hire purchase system. When buying under the hire purchase method, only a small fraction of the cost of an item needs to be deposited. The balance plus a substantial percentage in interest is paid over a given time period. For example, a television priced at $36,000 when bought for cash is also offered under the following hire purchase scheme. The customer pays a deposit of $12,000, then pays $2,000 per month for 24 months. Clearly, the total cost under the hire purchase method is $12,000 plus 24 multiplied by $2,000, which gives $60,000. This is considerably more than the $36,000 which would be paid had the customer been able to find the available cash. Let's consider another example. Two companies, R and C, offer a refrigerator for sale on hire purchase terms. The refrigerators are of equal quality and are both priced at $30,000 for a cash sale. Company R advertises that the refrigerator can be bought for a deposit of $12,350 and 24 monthly payments of $1,520 each. Company C advertises that the refrigerator can be bought for a $2,150 deposit and 24 monthly payments of $2,163 each. Which of the two companies would you buy from? If Company R is chosen, the refrigerator costs $12,350 plus 24 multiplied by $1,520, which is equal to $48,830. If Company C is chosen, the refrigerator costs $2,150 plus 24 multiplied by $2,163, which is equal to $54,062. Therefore, Company R would be the better choice, provided that the money for the extra initial deposit can be found. You can now attempt the following multiple choice questions.
A businessman went on a trip, and when he was ready to pay his bill at the hotel, he was distressed to find that a consumption tax of 15% had to be added to his already hefty bill of $6,500. How much does he have to pay in tax? A, B, C, or D? A person wishes to buy an article in a shop which is priced at $138 inclusive of GCT. What would be the price of the article before GCT was added, assuming that the rate at which GCT is charged is 15%? A, B, C, or D? Before a sale, an article is priced at $1,500 in a store. During the period of the sale, the price of the article is altered to $1,800, but a discount of 30% is offered on this changed price. How much less would a customer pay for this article if she bought it during the sale period as compared to the pre-sale price? Would it be A, B, C, or D? A furniture company offers a dining room set for sale for either $120,000 cash or a deposit of $25,600 plus 24 monthly payments of $6,000. How much more than the cash price would the customer pay if the hire purchase method were chosen? A, B, C, or D? A lady pays a deposit of $9,000 on a washing machine and is told that she has to pay 12 monthly payments of X dollars in order to make the total cost up to $36,000. Is the value of X A, B, C, or D?
Lesson 3. Let us begin our lesson on simple interest. Imagine that you have $2.5 million to invest in government bonds at a fixed rate of 18% per annum. Of course, you will have to pay a tax on the interest earned, but how much net interest per month will you receive on this investment if tax is fixed at 25%? Interest is equal to 18 divided by 100 multiplied by $2,500,000, which gives $450,000. Therefore, net interest after tax is equal to 75% of $450,000. That is, 75 divided by 100 multiplied by $450,000, which is equal to $337,500. Therefore, net interest per month is equal to $337,500 divided by 12, which is equal to $28,125. The formula for calculating simple interest is as follows. If one invests P dollars called the principal at a fixed rate of R% per annum, then the interest earned each year is P dollars multiplied by R divided by 100. If the investment is made over T years, the total simple interest earned I dollars would be given by the formula I equals P times R divided by 100 multiplied by T. That is, interest equals PRT divided by 100. Here is an example. How much interest would be earned on an investment of $240,000 over 3 years at a fixed simple interest rate of 16% per annum? I is equal to PRT divided by 100. That is $240,000 multiplied by 16 multiplied by 3, all divided by 100. This is equal to $115,200. Here is another example. How much money needs to be invested for 6 months at 12.5% per annum to earn simple interest of $100,000? We need to find P given I, R, and T. From I equals PRT divided by 100, 100I is equal to PRT, giving P equals 100I divided by RT. Therefore, P is equal to 100 multiplied by 100,000 divided by 12.5 multiplied by half, as the time is half year. This gives the result 1,600,000. That is, $1,600,000 needs to be invested. In some questions, you will be asked to find the amount in a person's account after a given time period. This will obviously be the initial sum invested, otherwise called the principal, plus the interest earned. Remember, amount is therefore equal to the principal plus interest. Here is an example. An investment of $60,000 amounted at simple interest to $72,000 after 3 years. Find the rate of interest per annum. In this case, we first need to find the interest earned. Remember, amount equals principal plus interest, or A equals P plus I. Therefore, I is equal to A minus P, which is $72,000 minus $60,000, which is equal to $12,000. Therefore, using I equals PRT divided by 100, R is equal to 100 multiplied by I divided by PT. See the work on transformation of formula in Algebra 1 if necessary. Therefore, R is equal to 100 multiplied by 12,000 divided by 60,000 multiplied by 3. This is equal to 6 2/3%. Try another example. A certain principal, P dollars, amounted to $150,000 after 4 years when invested at 5% simple interest. Find the value of P. This is a more difficult problem as both P and I are unknown. The only information given is that P plus I equals $150,000 as well as the values of T and R. We can solve the problem, however, as follows. Using I equals PRT divided by 100, 100I is equal to PRT, giving 100I equals P multiplied by 5 multiplied by 4. Therefore, I is equal to 20P divided by 100. Now, P plus I equals 150,000, giving P plus 20P divided by 100 is equal to 150,000. Therefore, 100P plus 20P equals 150,000 multiplied by 100. That is, 120P equals 15 million. Therefore, P is equal to 15 million divided by 120, which gives 125,000. Another type of interest is compound interest. Let us suppose we have $60,000 to invest for 3 years at 10% compound interest. The interest for the first year is calculated in the same way as with a simple interest. That is $60,000 multiplied by 10 divided by 100, which is equal to $6,000. Then the method is different, as the interest for the second year and subsequent years would be 10% of the amount, not the original principal. Interest for the second year is equal to 10% of $60,000 plus $6,000. That is 10 divided by 100 multiplied by $66,000, which is equal to $6,600. Interest for the third year is equal to 10% of $66,000 plus $6,600. That is 10 divided by 100 multiplied by $72,600, which is equal to $7,260. The amount at the end of 3 years is therefore $72,600 plus $7,260, which is equal to $79,860. The total interest earned is $6,000 plus $6,600 plus $7,260, which is equal to $19,860, or $79,860 minus $60,000. You should know that compound interest accrues in successive time intervals, which could be half-yearly, monthly, or even daily. Calculating compound interest using a formula is useful and can help in checking an answer obtained by a longer method. Here's an example. Let the principal equal P dollars, the rate equal R%, and the time period equal T years, interest being compounded annually. The amount at the end of 1 year is equal to P dollars plus I dollars. which is equal to P dollars plus PR dollars divided by 100. Therefore, A is equal to P multiplied by 1 plus R divided by 100, and this amount becomes the principal at the beginning of the second year. At the end of the second year, A equals P multiplied by 1 plus R divided by 100 plus R% of this same value. This gives P multiplied by 1 plus R divided by 100 squared. Similarly, at the end of the third year, A is equal to P multiplied by 1 plus R divided by 100 cubed, and at the end of T years, A would be equal to P times 1 plus R divided by 100 to the power of T. The formula for compound interest is A equals P multiplied by 1 plus R divided by 100 to the power of T. Look at this example. Calculate the total interest earned when $75,000 is invested for 18 months at 12% per annum compound interest, with interest being compounded half yearly. There are two ways to calculate this. Using method 1, amount at the end of first half year is equal to $75,000 plus $75,000 multiplied by 0.06. That is 6% per half year, which is equal to $79,500. Amount at the end of the second half year is $79,500 plus $79,500 multiplied by 0.06, which is equal to $84,270. Amount at the end of the third half year is $84,270 plus $84,270 multiplied by 0.06, which gives $89,326.20. With method 2, using the formula A equals P multiplied by 1 plus R divided by 100 to the power of T, R would become the rate for 6 months and T would become the number of half-yearly periods. That is, R equals 6 and T equals 3. Therefore, A is equal to $75,000 multiplied by 1 plus 6 divided by 100 all cubed. This is equal to $75,000 multiplied by 1.06 cubed, which gives $89,326.20. EPA Technologies. EPA Technologies is a software development company specializing in educational products for the Caribbean curriculum. We are committed to making a difference to education at all levels. Our vision: to become the leading developer of educational software in the region and ultimately establishing our presence in the global marketplace. The EPA Virtual Educator is the first in a suite of e-products specially structured to make the understanding of mathematics easier. With the use of graphics and animations, as well as the inclusion of an intricate array of questions and tests, the assimilation of key concepts is guaranteed. The EPA Virtual Educator. Who is it for? It is for everybody, but especially for students who want to revise for exams, students preparing for CSEC mathematics, persons resitting CSEC mathematics, or anyone just wanting to learn the subject. EPA Virtual Educator. Help yourself. Teach yourself.